I've been meaning to do this video for quite some time now. Basically, 3 months ago, I posted a video on my Instagram and it's gotten nearly 1 million views in just a couple of months. Now, what I want to do with this video is I want to go over some of the key pointers that I feel a lot of people missed watching this video. The other things we're going to go over is the one tool you can use to identify trading opportunities just like Richard. And then lastly, I'm going to show you a bonus trade from S&P 500. If you recall, about 2 weeks ago, we had a massive drop of 4% in just a few hours on S&P 500. I'm going to show you how I was able to take advantage of that move before it even happened. And once again, it's utilizing some of the trading technique that Richard uses in this video. So let's quickly react to the video. And once we're done watching the video, I'm going to go into the rest of this breakdown and reaction to Richard's trading.
Now, with Richard's opening gambit over, an even bigger player is entering the market, trying to buy £20 million with its Deutschmarks. But more likely, the Russian, otherwise known as Boris, in reality the Bank of Foreign Trade Moscow, is speculating that the pound will rise. Richard calls Moscow direct to find out what's going on. They could be buying a little to push the price up before selling a lot.
This might be the right time.
But Richard guesses that they must be buying from other banks too in a big operation as the pound begins to rise. So he decides to risk jumping on their bandwagon.
58.63. Take 5.
His first £5 million, and with each wave he buys another £5 million. He's bought £35 million. Richard and the Russians between them have helped the pound up ½ cent. But now taking the profit proves irresistible, so Richard starts selling. A brief speculative bubble has burst, but Richard has won again.
So how much money did you make on that little bubble?
About £75,000.
That took you about half a minute. The price just
Took about 3 minutes.
So what are the hidden lessons we can take away from this video? There are 3 hidden lessons. The first lesson is unusual trading activity. What you see in the video is Richard spots a massive trading size coming through from Russia. And this causes Richard to start reacting. He starts calling his other counterparts to find out, is there some sort of news that's coming into the market causing Boris to buy up and load up on GBPCHF? This is what got Richard going. And a lot of times what people don't understand when they trade using volume is you are supposed to look at relative volume, because what relative volume does is it shows you if there is any unusual activity, if there is anything out of the norm. What this reminds me of is during 9/11, right, after the whole situation happened, when they ran investigations, they found out over the past weeks leading up to 9/11, there was some unusual selling activity in the market, right? So what happened is the CIA decided to hire someone called Jim Rickards. Jim Rickards, I believe, was a financial lawyer, and he also advised the CIA on a project called Project Prophecy. And the intentions of that project was to start spotting unusual activity in the market using volume, using data that they can get from the market, because their belief and their thesis was the market tends to show moves before anything happens. And the whole reason they wanted to put that project together, because they saw it as a matter of national security, right? They wanted to see if there's any unusual activities going on in the market that could potentially raise the alarm to terrorist activities or any other geopolitical tensions and things like that. So it just goes to show you that unusual activity in the market is something you need to pay attention to. As we see in the video, Richard spotted some unusual activity, and that is what caused him to start reacting before he was able to place the trade. And that takes us to the second hidden lesson from this video. The second hidden lesson from this video is always trade in the direction of the big money, of the big players, right? So as you saw there, Richard saw this opportunity when he saw the big buying coming in. He decided that he was going to load up. I believe it was 20 million contract. I can't remember what it was. I believe it was 20 million, but you can watch it back and you can see for yourself. But that induced him to trade in the same direction and take advantage of the move. The trade only lasted 3 minutes and he was able to capitalize by trading in the same direction. However, there's a caveat, and this takes us to our third hidden lesson from this video. So the third lesson from this video is recognize that just because you see a lot of buys doesn't necessarily mean the price is going to go up. As you heard the narrator say,
they could be buying a little to push the price up before selling a lot.
So what is that essentially? This is what we refer to as inducement. So a lot of you smart money concept traders will recognize this as inducement, right? So what they did, right, or what Boris could have been doing was he could have been buying to induce other buyers to get involved. And he successfully got Richard to buy along with him. But can you imagine all the other people that were not on camera, all the other institutions that probably spotted that buying and thought to themselves, oh, great opportunity, let's buy. And then what happens? Right after 3 minutes, when Richard got into the trade, it sells off, right? So luckily, Richard was able to pull out his profits in the space of 3 minutes before the market tanked. So without wasting any more time, let me show you how I use a certain tool to identify unusual activity. Okay, so how do I go about identifying unusual activity in the market, and how can you also identify unusual activity in the market? A couple of months ago, I put out a short course. It was about an hour, 30 minutes. And in that course, I identified one tool that you can use to spot and identify when big players are in the market. And that tool is called adaptive big trade. This is not to be confused with big trades, because I've seen a couple traders online, they've showcased big trade and how they use big trade. It's an amazing tool, don't get me wrong. However, remember, when it comes to volume spread analysis, we are looking for unusual activity. What adaptive big trade does is it adapts to the amount of data you have on your screen. So if you zoom out, you see that the adaptive big trade adjusts to show you the biggest 10 trades of the data you have on your chart. So if you have just one day loaded up on your screen, it would show you the 10 largest trades for that day. If you zoom out and you go 2 days, 3 days, 4 days, a week, it shows you the 10 biggest trades. This is why this tool is so amazing, because it literally shows you the biggest trade relative to the time period that's on your screen. Now, let's go into how I use this to trade. And I'm going to show you the trades I took this week on GBPUSD using this tool. So without further ado, let's jump on the charts. Coming into this market, I was looking for selling opportunities, because what I saw during Asia session was I saw a lot of buying coming into this market. As you can see right here, there was a lot of above average volume. So these were all buyers, but what happened was all that effort from buyers led to no result to the upside, and price reversed on them, which meant that these buyers that came in were more than likely trapped. So when price comes up, I was expecting them to start getting out at break even, which would then cause price to reverse and continue down. So what I like to do is to mark up that level where I see the volume cluster of buying, as you can see right here. And then if we just mark up the value area low, which will be the first level where we might see a lot of these guys starting to get out at break even. So as you can see, when market opened at 8 o'clock, after price traded down slightly, price came back up to where these buyers from Asia session were trapped. So it was at this level I wanted to see sellers taking initiative and getting aggressive. So this is where the adaptive big trade indicator comes into play. So if we just turn that on, you can see straight away that this was the biggest buying volume. Remember, we talked about relative volume. So if we zoom out to the start of the day, you can see that this was one of the biggest selling volume that came in. So as soon as I saw that, it was at that point that I started to get my position. So I got in somewhere around here as price closed back down below the upper VWAP band, and it was this massive sell order that confirmed my entry. So if you remember, Richard saw the big buying order coming in, and Richard basically took advantage and got in for his positions for 3 minutes and quickly rolled the wave to the upside. So this is practically what I've done here. I've seen that heavy selling coming in, knowing that a lot of these buyers are more than likely selling to get out of their buy positions, as well as more sellers adding to the positions. So it was inevitable, or close to inevitable, that price will continue to trade down. And as you can see, that's what happened as price sold off. And you can see more aggressive selling came in right here. So that was my first trade. Let's get on to the second trade. If you remember earlier, we talked about how it's not every time we see massive orders that it means price is likely to head in the same direction, because it could be inducement. And that's what we have here. So on this day, I was looking for buys. I had a level of interest somewhere around here, and I knew price will eventually reverse. However, I was waiting for all this selling that we saw to basically come to an end. So as you can see here, firstly, with the adaptive big trade, we can see there was a massive buyer that came in here, and they were absorbed by a passive seller. And you can see price traded down, and you can see all that volume here. This was climactic volume to the downside. So sellers were definitely taking control of this market. So I marked up not only the big trade that came in, but I also marked up the climactic selling volume, because I knew this would be a resistance level for price to break, right? And as you can see, after London Open, buyers came in and tried to break this level, and they couldn't. So this was the line in the sand for me. This was a level I know that price has to break in order for me to know that buyers were definitely involved. Now, this only took place after sellers got induced. And what we can see is this dotted line that marked the low of the day was the deciding point for where sellers were going to get aggressive. So as you can see, that passive seller that absorbed all the buying coming in at this point was still present right here. And what they were doing was they were holding prices down in hopes that retail traders and other institutions could get aggressive to the downside in order for them to then buy up all that selling volume. And that's exactly what we saw here. So price was selling off. The big trade highlighted very heavy selling at the low of the day. However, there was a massive buyer who was absorbing all that selling volume, and more than likely, it isn't 100%, but more than likely, it was probably that seller that was absorbing all the buy orders that were coming in, so that they can then hop on the other side at this price level right here. And as you can see, as soon as they absorbed all that big selling volume that was coming in, as traders got aggressive thinking that price will continue to push below the low of the day, we see this massive amount of buying. As you can see, several consecutive bullish candles without any selling. Now, remember what I said about this level, this zone right here that we marked up? This was the line in the sand, and we can see that absorption that took place here, that manipulation after inducing traders to the sell side, led to price breaking this line in the sand that I had up earlier. So basically, once I saw that price broke this level, retested, and I saw sellers get absorbed again, right? So this was another big trade to the downside. However, I can see that there was someone who was interested in buying up the market. So I know not to trade in the same direction of the sellers this time. So instead, once I saw that massive bullish candle, this was where I got in my first position. So once I got in here and price started to push, I knew that buyers were fully in control, because we broke this line in the sand. You can see we tested it one more time and price continued to trade up. And that was how I took this trade. So as you've learned, it's not all the time when you see a massive trade order that it means that price will head in that direction. You have to mix in context, and you have to understand what the market is trying to tell you. Is this an inducement, or is this actually an order that could push price in the direction of the trade that's coming in? Okay, there you go. You've seen how I was able to use the adaptive big trade indicator to catch some significant profitable trades on GBPUSD. Now, the bonus video. I've got S&P 500 for you, and this is a trade I took on the day S&P 500 dropped 4% in just a few hours. So let's jump to that video. This trade here is a little different from the two trades that we looked at earlier. And simply because with this one, we're not using the adaptive big trade. All we need is delta. And simply put, delta is the difference between buying and selling volume. And straight away, when you look at this chart, you can see that market open right here and buyers pushed price up. But once price got to this high, we see a massive sell candle to the downside with stacked imbalance, showing that sellers were overpowering buyers. So if we just pull up the delta, you can see straight away this bar's delta relative to all the other bars for the rest of the day was extremely high. So this is unusual selling activity. So once I saw that, I pulled up CVD, and you can see that the delta for this bar engulfed the past 1, 2, 3, 4, 5 bars. So this was very heavy selling. When you combine that with the stacked imbalance, as well as the fact that we broke below the upper VWAP standard deviation band, this was where I started to realize that sellers were getting very strong, right? Because we've seen the unusual selling activity. So as price continues to trade and hold below the upper VWAP band, I saw this stacked selling imbalance. And when you look at CVD, CVD was starting to go negative. So when you combine that with this candle here, with all that massive selling, the stacked imbalance, if you're an ICT trader, you also see the fair value gap and the fact that price is rejecting from the upper standard deviation band. This was where I got into my trade because I knew there was very heavy selling, very unusual selling. And that was what made me confident about this trade. So I got in my position right here with my stop loss right above this swing high, knowing that we were rejecting from where the stacked selling imbalance was. And as you can see, when we move on, you can see how price completely tanked for the day. So this is how you can use the adaptive big trade and delta to your advantage just by looking at unusual activity in the market. When you spot that, you know something is going on. And if you've got the right context, you'll be able to catch a very nice trade. So that was S&P 500. And that's how I used the volume delta to identify unusual activity in the market. So to conclude, the lesson that you should take away from this is if you're not seeing consistency in your trading, or if you're consistently getting stopped out, you need to see whether or not these tools like adaptive big trade or volume delta or volume in general can help you gain that consistency that you're looking for and help you improve your edge or your strategy in the market. So that's it for me. If there's anything that you would like me to cover in future videos, do leave a comment down below. And please do me a favor, hit that like button, hit that subscribe button. It's the best way you can tell me that you like and you enjoy and value what I'm doing. So that's it from me, and I'll see you guys in the next video.